What's that, everybody? It's your boy Creative back at it again with another algo hack. Now, today we're going to be doing a in-depth dive of the backtest results that we reviewed last time, but this time we've added a little bit more features to it so we can really get down to the granular and understand the numbers. So if you haven't already, I need you to like and subscribe, and I need you to stay tuned throughout the whole video so you can see some edge that we've already added to our backtest. Now, this backtest or the strategy that we're building is for 0 DTE QQQ options. What is 0 DTE? 0 DTE are option contracts that expire the same day, and we're using QQQ. QQQ is the top 100 tech companies within the NASDAQ. So again, how the strategy works, we're looking at the 1 minute price bar from 9:30 to 11:12, and we're trying to detect if the current bar is 2 times bigger than the last 5 bars. Once we make sure that happens, we have our momentum or our wave, right? Then we're going to check the volume to make sure it isn't too crazy. We want controlled moves, not chaos. If it's going up, we're buying a call because we're bullish on the market. We think the market is going to go up. If we're going down, we're going to go buy a put because we're bearish on the market. We think the market is going to go down, right? All right, the backtest just wrapped up. So what we're going to do, again, like I said, is being able to thoroughly review and understand the results of the backtest. Now, all of our strategies start at $100, and we want to see how well the backtest performs in 2024. So it had 251 trades and was able to go from $100 to $76,164.50, right? We have a Sharpe Ratio of 0.78. What does the Sharpe Ratio measure? It measures the return earned per risk, and being a Sharpe Ratio of 0.78, this is acceptable. We have a Sortino Ratio of 1.34. What it measures is like the Sharpe Ratio, but it only penalizes the downside volatility. Why this matters is because upside volatility shouldn't be penalized. We have a result of 1.34. A Calamar Ratio of 3886.67. What this measures is the annualized return divided by the maximum drawdown. We have a system quality number of 12.28, and as you can see, just looking at the scale, we're hitting holy grail numbers, right? So the strategy is performing really well. We have a max drawdown of 19.52. So at one point in time, the strategy went from $100, dropped down to $81, right? But it was able to rally to 76,000. What was that? 76,164.50. So that's not bad. Then we have a recovery factor of 38.96. What this measures is the total return by the max drawdown. So now we have the win rate of 77.7%. That's kind of cool, 777. So out of 251 trades, our strategy was able to win 195. We have a profit factor of 5.08. What does that mean? For every $1 loss, we was able to make $5. Now, as you can see, the strategy is performing well. Here's our top 5 trades, right? So we can see we have 3 puts and 2 calls, ranging from anywhere between $2,300 and $1,700. And then our top 5 worst trades from, more puts than calls here, right? And then our monthly performance for the strategy. As you can see, month over month, the strategy did make money, and it started to compound quite ridiculously, if I may say so myself. Now, we're going to be building out the actual bot for this strategy. So if you want to see us run this backtest on 2023, I need you to put in the comments 2023. And don't forget to like and subscribe. It is your boy Creative. We'll be back at it again with another episode.